Hi guys, it's Thomas here from COTbase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 10th COT report, and as usual we're going to start off with the changes in commercials positions. So here we go. As you can see, we've got 5-year note on top with a 35% change in commercials positions, and even greater change size in small speculators positions. Although you can see that in small speculators we do see larger changes than in large speculators or commercials positions. So these change sizes are larger than average, that's for sure, and of course it's signaling in a short term a bullish signal. Let's have a look at the 5-year chart and see how extreme this market is. Here we go. You can see that basically if we look at commercials and on this 5 years range, they're basically roughly at the middle. So we can't really talk about a strong or large extreme. Maybe a week ago we could have talked about a relative one if you look at this line over here, and that could have been considered a bearish signal. And of course, if you look at this 1 week's candlestick over here, you can see prices have declined over there. So let's move on, have a look at 10-year note where we had a 28% change in commercials positions. There you go. You can see large speculators just going beneath the zero line, becoming net short, and we have pretty large changes actually this week. Let's have a look at the 5-year chart also in 10-year note and see whether we have an extreme in this market. Well, again, it's not a significant one. We can't really talk about an extreme. An extreme would be, in my opinion, something above 250,000 contracts net long territory for commercials, or the other side if they were at close to 150,000 contracts net short maybe. So there's not really an extreme that we can talk about. But let's move on and have a look at sugar. Maybe we're going to find one over there. 23% change in commercials positions, actually going down beneath the zero line. So actually commercials in sugar market were above zero line, being net long for a very short period of time. If you remember, we've been talking about cotton for quite a long time, where cotton past few months ago just went back to net short territories, but before that they were actually long for a pretty long time. So basically we can say that there was and there is still an extreme in the market. It was over here, the clear one, when the commercials were above a zero line, and you can see prices have started to react, and you can see them prices going a bit higher. So actually this may easily be a bottom in prices, and we could actually see higher prices from here. Moving on to large speculator COT extreme, let's have a look at that. Here we go. You can see palladium, feeder cattle, and cotton on top with all-time signals. So let's open palladium first. It's the first on our list. Here we go. Right away we're going to look at the 5-year chart. Here you can see this extreme is just widening as prices are getting higher and higher. So stress levels are still building up, and this was the case for quite some time now. So we're just waiting for a nice top to develop, and a confirmation that the stress level has reached the maximum. But moving on to feeder cattle, where we have another all-time signal. Again this week, let's open the 5-year chart. Here we go, and you can see large speculators at all-time levels. Commercials are getting close to it. You can see I've been talking about the past few weeks now that commercials are the ones who are not really at their all-time levels yet. Small speculators on this 5-year chart, you can see it, they're at pretty extreme levels. So this is a really nice strong bullish signal that we get from the extreme, and as you can see, back in time these signals were pretty effective, and they could actually signal the bottoms in the price. Moving on to our last market this week that we're going to have a look at is cotton, a market that we've been analyzing in the past year for quite some time. Basically we've been talking about it a lot when commercials were in net long territories, and I was telling you that Whenever that happened in the past, prices bottomed out, and then afterwards we could see a rally. Now the same thing happened, and you can see the rally has been going on pretty nicely. And while it's doing that, you can see the widening of the extreme. And of course, I have to warn you that we've witnessed something similar back here in 2010. When we had back then, this was an all-time extreme, by the way, but you can see that prices did not react, and that a very large parabolic rally started afterwards. This was one of those rare cases that we call commercial capitulation, when commercials get margin calls and just cannot hold their net short positions, and that fuels the rally. So I'm just warning you that we may see something similar happening again. I'm not saying it will happen, but we've seen that in the past in cotton. So very interesting market here to have your eyes on. That's going to be our last market. As I said, if you would like to have a look at other COT charts, you can do so at our COT charts page. If you would like to have a more detailed and in-depth COT analysis, I advise you to check out our COT analysis page, where you can add other very useful functions to your table: long-term trend, volume and open interest scores, the COT index, or you can simply look at new COT report types, CIT, TIF, disaggregated maybe, or of course new other COT data types if you're interested in that. So thank you very much for being with me. I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.